Hi, everyone. Thanks a lot for joining us here and talk about security tokens and how market players are adapting to an STO world. To start off, I'm going to ask each of our panelists to give a little bit about their background, what your current focus is and what your company does, and then also a little bit on the scale of your business, if you can. So if we can start, let's start on the end with Fred. Why don't you go ahead?
Hey guys, my name's Fred Schibet. I'm one of the co-founders of Finder.com. We run a cryptocurrency comparison service. Also run a cryptocurrency brokerage we started last year. It focuses maybe on high-end, I guess, retail, a little bit of corporates, and we market that obviously through Finder.
And current role, Ibex?
Well, I guess they're my current roles.
Go ahead, Philippe.
I'm Philippe Bakazi. I'm the CEO and founder of the XPTO Group, which is a crypto finance enterprise. Our main line of business is really market making and liquidity provisioning on a proprietary basis, meaning we run our own money. Over the years, we started in 2015. Over the years, we've developed in other businesses. We have a mining facility, we have an asset management arm, and we invest in companies in the space. And I think that covers it.
Olga.
My name is Olga Feldmeier. Today I'm CEO and co-founder of Smart VALOR. I used to be a banker, ditched the bank, became a Bitcoin queen. Used to work for Xapo, was responsible for getting Xapo licensed in Switzerland. And now with Smart VALOR, we are creating one of the first security token exchanges in Europe for alternative investments.
Great. So in terms of security token offerings, I wanted to start with just a definition. I know, a lot of you in the room are familiar, but Olga, can you talk to us just a little bit about an STO, what is it, how does it differ from an IPO, and why do we need a blockchain for it?
Oh, that's an exciting question. So first of all, well, how is it different from IPO? Guys, if you think about it, IPO, traditional banking, Wall Street, we never had something called global IPO, right? If you're a company and you want to, put out your shares to the public, you either do it on NASDAQ in London or in Japan. But global IPO, no, we never had this, right? So STO is a global IPO and done in a little bit technically different manner, right? So you issue a share and you issue a copy of the share on a blockchain. But the biggest advantage is, of course, that you don't need all the old infrastructure, all this, collection of centralized databases, where one company called Central Registry holds track record of shares, and the other company, which is kind of like a bank, puts transaction to the exchange, then there is an exchange, there is a clearinghouse, there is like this ocean of intermediaries. And why we needed them? Well, because we had centralized databases, right? And everybody needed to keep track record of who owns what, and we needed to exchange this data. So now we don't need them, right? Everything is recorded on a global, decentralized, peer-to-peer database. It's blockchain, right? So actually, we can do completely without them. And this is an amazing, opportunity and advantage of tokenized securities.
Okay. And in terms of the current security token market, the activity is low so far. So there are some exchanges, Open Finance is one that comes to mind that trades the blockchain capital token, but there's not, there's very low trading volume, not a lot of activity so far, despite really a lot of talk about security tokens. What do you think, what are the barriers to adoption? Philippe, maybe you can start off on this.
Well, for securities token, it is basically an equity on a blockchain. So your front office kind of looks similar, but what you're doing is that you are you're leveraging a public blockchain, hopefully. Maybe it's a private blockchain, although I don't really believe too much in private blockchains for centralization issues. But what you're trying to do is make things more efficient on a middle to back office on that layer. right? Your clearing, your settlements, your transfer agents. You're trying to make things more seamless and more transparent, and therefore cheaper. Now, from a liquidity standpoint, making a market in STO is not a whole lot different than making a market in any kind of issuance, equity issuance. You're bound by the same rules for about the same rules. And for players like us, so we are not involved currently in securities at all, and we're not involved in securities tokens. We're looking at the market very carefully, but for now we're not convinced that the ecosystem is developed enough for us to get involved. Like to be able to really make a meaningful impact in an STO, you need to be able to hedge your exposure. Accumulating inventory is great, but you really have to believe in that securities token, and that becomes more of an investment thing and less of a trading activity. So we are right now, due to regulatory issues, they're all different around the world. If you are issuing something in Switzerland, it's going to be different than if you're issuing something in the US. And so for us, there's a lot of cross-border jurisdictional risk that we're not quite comfortable with. So there are a lot of barriers to entry. And I think just like anything in the space, it develops over time, slowly, but it will, I believe, it will get somewhere. It's a little bit like stablecoins, very much similar in a way. Now stablecoins are the rage, but it's securitizing a bank account effectively. And you know, so long as there's a utility, people will come and they will buy the securities token, right? It's all a matter of finding utility in what you're securitizing or you're tokenizing.
So I just want to add to that as well, because I think you're exactly bang on. It's very hard to make a market right now, you know, given the liquidity. But I think as well, if you were considering opening, you know, a company or raising money, and you were going to go down the legal path, you know, you're going to spend probably an equivalent amount of money potentially on an STO, or I guess it depends on, you know, which country you're in, towards getting an IPO. Potentially, you could spend legal fees, all the things, all the compliance, all those kind of things. Sure, like once you're, you know, you've got an STO going. The problem there is you're probably not going to have as much liquidity, and whereas if you go with an IPO, you could spend a bit more, and you're probably going to get a bigger market and a bigger audience, right? So, you know, guys can trade your stock, and obviously you can get more exposure to more investors and those kind of things. So I think there's an issue around like that in the beginning. Then I think there's another market. It's like, so, you know, this idea of tokenizing assets. Let's say you tokenize a piece of art. Now, I could imagine, you know, for you, Philippe, that would be really hard to measure that, right, and make a model around that. Like, where does this piece of art go? How much is this art supposed to be worth? Or whatever it may be, right? So that's going to be hard to price. It's going to be hard to make liquidity on something like that, unless there's really smart models, I'm sure. But I think those new asset classes particularly, or new tokenized things, the actual models, heuristically and quantitatively, would be very difficult to make. I'm sure there are other easier ones, you know, around property, where I do think there's an opportunity, or simpler assets where people understand the modeling, and you can quantitatively do that. But I think, you know, a lot of people go to market to get liquidity, and I think those are kind of two things as well that might be considerations.
Exactly, and to add to this, actually, you know, as a form of security changes, right? So it used to be certificate, piece of paper, or electronic entry, and now it's digital cryptographic object recorded on the blockchain. So the form is different, right? So as the form is changing, we can actually enable a new market mechanism, right? So to give you an example, why don't we trade something that is less liquid in something, let's call it smart contract-based auctions? Let's offer this security token just once per week. There are certain hours. In those hours, you can trade. Let's pool the liquidity. And smart contract settles all the bids and asks, right? So, and this is just an example. Like, we can create such a new, efficient mechanism how to trade and price alternative investments, right? That do not exist today. And this is all coming, right? On our exchange, we're implementing a lot of this stuff, right? And a lot of stuff will not be traded on a daily basis. And this is perfectly fine, right? there still will be quite an advantage in terms of how easy you can transfer an asset, or can you at all? If you think about tokenized venture capital, tokenized, private equity, tokenized art, this kind of stuff, like, you cannot transfer this today at all, right? And then it becomes a token, and there are new ways, right? So this is an amazing thing.
Olga, and in terms of some of the barriers, so the barriers like the jurisdictional barriers or the low liquidity to start, how are you trying to overcome those at Smart VALOR?
So, barrier in terms of regulation or cross-border?
I'm thinking more in terms of overall adoption. So
overall adoption.
Yeah.
So you see, basically, it's a very classical problem, right? So look, what is exchange? Exchange is a platform business, right? Multi-sided market, right? So you have investors, you have asset issuers, you have some other contributors, and you kind of like need at the same time all of them. The more the better, right? So the question is like, okay, so now you have this one security token, and then the second, and then another 10, and then you have 100 investors and 5 investors. But how do you go from, from 0 to 1, right? How do you, at the same time, you pull tons of asset issuers and tons of investors? So this is a challenge for business like us, right? We've built an exchange. Oh, by the way, guys, we are offering it for public access starting tomorrow in test environment. So everybody who likes tech, please come and test it. smartvalor.io, sort of for advertisement. So we build a tech, we have regulation. Now the question, how do we get all these people to this place? That's the biggest challenge, right? And the answer is, let's go to where the investors are today. Crowdfunding platforms, cryptocurrency exchanges, banks. This is the 3 groups where they are today. But today on crowdfunding platforms, they just invest and this is it. There is no secondary life. After you put your money into it, that's it, right? And the advantage of tokenized securities, yes, there is a second life. You can sell and buy it. Maybe not super liquid, but at least you can do it. So we're going after crowdfunding platforms. We issued our utility token on different exchanges. This year, 10 exchanges coming up, right? So a lot of crypto, our crypto community, people will get in touch with our platforms through our utility token. And now we're receiving requests from banks that want to get access to those products for their customers. They have millions, right? So it's all about, finding the right channels and getting all of this at the same time on one platform.
See, I just want to add to that. See, my contention is I don't think there's anything wrong with exchanges. Exchanges work. There's order matching. It's done. I don't think that's actually where this SEO market's going to go. I think it's actually, if you look at a market, you've got broking, exchange, and clearing, right? That's how a normal, regulated market works. I don't think this SEO market, I think it's been pitched as this potential whole overview and disruption of a stock exchange. I don't think that's real. I don't think that's going to happen. Those markets work as much as everyone doesn't think it does in many millions of dollars, billions of dollars, and that's a fact. And so the exchange and order matching works to a large degree. Sure, it can always be improved and the technology can get better. But if you look, like for example, obviously I come from Australia originally. They've adopted blockchain into the stock exchange. But that's mainly what I think the opportunity is around clearing. And I think, Philippe, you talked about this as well. I think that's where the opportunity lies. I think this idea of tokenized assets as well, I think we need to sort of put that to the side again, where you can have secondary markets and those kind of things. I think that's a whole other thing. There need to be different mathematics done there, and I think that's another thing. But I think we need to look at this in a different paradigm. I think we need to look at it as broking's pretty good, exchange is pretty good, but clearing, I think that's where I think blockchain can come in. And I think there's a real opportunity there. But this idea of it having to be public and all those kind of things as well, I'm not as technical enough to know the ins and outs of that, and I don't think necessarily it's required. Well, it's being done right now, again in Australia. So I'm not sure in terms of liquidity. I think it could be potentially, I guess to answer your question as well, to add to it, Jeff, is that potentially I think the liquidity might actually already be there on some of these markets and these places of exchange, and we're just adding a beautiful blockchain underneath it.
Yeah, I agree. Although the issue with blockchain today is that a lot of people want blockchain to do pretty much everything, and they want the trading to go through blockchain. Why not? Well, trading on blockchain is really not that efficient, and for a market maker, it's very difficult to make market on decentralized exchanges. Centralization is fine. I mean, for certain things, centralization is totally fine. I mean, when you're matching millions of bids and asks at the same time, don't put it on a blockchain. You're just hurting yourself. But it does make sense when you're trying to build trust when there's issues of counterparty risks and things like that, where you want to basically utilize a blockchain to create transparency, but to really get rid of the trust issue, where, and that's where where you can clear quickly. It doesn't need to be milliseconds, but it's clearing faster than it would on a non-blockchain in the current traditional world. And so it is value. There's utility there. And that's where we should focus on, is where the utility is the maximized.
Exactly, and the utility is exactly this, right? So why this is so efficient? Because you don't need so many intermediaries, right? I want to highlight this point. Like, you don't need, exchange, clearinghouse, registry, centralized registry, right? Where, they take notes that you sold me the share. You don't need banks. You don't need all of these people, right? All of this can be done on the blockchain, right? Because on the blockchain, you do two things. The transaction happens on the blockchain, and at the same time, it's a ledger, right? And this is important because, what it means that, in terms of players, who is doing what in the system, the roles are changing, right? You don't need those old categories, those old roles, right? And the problem is, guys, that, it's very difficult to change the whole legal system of which players we need in the financial system, right? Like, how would you say now we don't need a clearinghouses? We don't need centralized registry? Like, really? But what those folks are going to do, right? And this is what happens now here in US. Companies like T0, they have to apply for all the same old licenses. ATS, they need to be this, they need to go exactly for the old infrastructure licenses. Also, actually, they don't need it. They don't need to be 3 entities. They can be 1 entity.
But you would need banks to buy into that, right? Or not banks, but the regulators to buy into that, right?
Exactly. They need to buy into that, and they need to want it. But the problem is, we have a massive Wall Street. There is a massive industry that don't want to be abolished, right? And if you think about, like, whose interests, are protected and in which way, well, the regulation is the mechanism for protection of interest of insiders, right? And I want to highlight that in smaller countries like Singapore, like Switzerland, for example, they're developing a completely new licensing category. This licensing category is called, crypto exchange, and it can be all in one. It can be custody, bank, it can be clearinghouse, it can be exchange, it can sell utility tokens, security tokens, it can sell it to institutional investors and retail investors, and it's just one license. This is innovation.
One last question, we're just about out of time. Where do each of you see the landscape a year from now? When you think about where we are now with security tokens and low trading volume, but where will be a year from now? Fred, why don't we start with you?
Yeah, so I think the alternative, like tokens, I think potentially there might be some more markets there. I think there'll be some unusual use cases, and I think that might continue on. I just think the main game will be in existing exchanges that are trading equities or securities, more and more applying and testing blockchains to do clearing. There are these tests going on already. There are banks actually doing that as well. And again, I think that's the more likely route that I think that will happen. And these experiments and these proof of concepts are happening. It just takes a lot of time. These are large companies, and they just got lots of people, and it flows through. I run a 250-person company. It used to be a a nice little small company before, and now it just takes a lot longer for stuff to come through, right? And that's just how it is. I think that's the reality of where we're going to get to, and in a year's time, there's probably going to be 1 or more, 2, 3, maybe proof of concepts, but I think that's sort of where we'll get to.
I agree. It's a slow-moving revolution across all of these sort of sub-asset class, call it an asset class, within the digital space, right? So Bitcoin is about 10 years old, a little older than 10 years old. Ethereum is 5 years old. And it really takes a long time for ecosystems to form. So in a year's time, I don't think we're that much further along from a liquidity standpoint, at least. You know, but you know, people are building. You know, we're investing in a number of companies that are doing a lot of things. Now, whether or not it all gels together and suddenly we turn the lights on and bingo, you know, you got it going, it's not going to happen that way. So I think we look at 10 years out. Everything's 10 years out. Every time we do something, it's like, what will it be in 10 years? In a year, I have no idea. I mean, Bitcoin was at 8,000. It was at 3,000 6 months ago. I had no idea. I just stopped making predictions a long time ago because it's always wrong.
It's just mistake.
You know?
Olga.
Yeah, I think 3 years is easier to talk about, really. Like, I think 3 things will change. So first of all, the protocols for issuance of security tokens will get much better. It will be just like using PowerPoint, right? Couple of clicks and you have your security. Number 2, we're going to see the rise of specialized platform along the asset classes. There will be a platform for art, you know, there will be for, you know, early tech stage companies, there will be platforms for venture capital, private equity, security tokens. And on the top of that, we're going to see platforms kind of like Smart VALOR, who just pull all the tokens, all the security instruments from other platforms. And those platforms will, you know, pull the liquidity with other regional champions, so US, Smart VALOR in Europe, and Asian. We're going to really work together and create this global liquidity pool and world book, right? And hopefully, we will not do the mistakes of traditional exchanges today, where there is no global IPO, but hopefully we will work together and we will create a truly global IPO.
Okay. Thanks, everyone.